Good evening and welcome to this session of the live virtual classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. So we begin our discussions or deliberations on the corporate and other laws today. The sessions are such that, we'll be covering only the highlights. The entire topic will not be covered, which you would have already hopefully watched on a video. The video would have given you the entire topic. The idea is only to highlight or to share with you some thoughts on the important, or shall we say, prominent aspects of the topic. The idea is not to say that the other areas are not important, but to say these are very important and need to be understood. If you have any queries or questions, you can definitely raise on the entire topic at any time so that answers could be given to you. And later, around say 2 hours down the line, around say 8 o'clock, you could raise questions which would be answered. Before we get into today's topics, preliminary, which is a brief introduction of the conceptual knowledge on this company law itself would be useful. See, a bulk of your syllabus would be company law, the law relating to company, that's a corporate. So basically, the Companies Act is now in a new avatar, that is the 2013 Act. The Companies Act 2013 has about 470 sections. As against the earlier law, the Companies Act 1956 had 700 odd sections. Now it's whittled down to 470 with 7 schedules. It's quite, even now, it's still a pretty long enactment, 470 sections. But the core principle, the basic principle running throughout this law are very few. Once these basic principles are understood, thereafter it's only details. So in the lectures that we'll be following, I will see to it that you're able to remember the details with ease. So the idea is that usually by using images, structures, diagrams, flowcharts, you can remember. But the principle is very simple. The entire law, the entire framework of company law is meant to enable only 2 purposes. Basically, protection of the investor, protection of the creditor. In fact, even today's lecture, I will show you that there are provisions which are enabling protection of the investor. When you invest in a company, your hard-earned money should not be misused by the promoters and directors. Protection is there. When you lend money to the company, you're a bank, or you are an unsecured creditor, or you're a depositor, then, or a secured creditor, whatever you are, your money should be safe, your money should be returned, the interest should be paid. Otherwise, you should have some method of stopping the company from going on with its activities, selling whatever assets are there, and realizing your loan, whatever you can. So these provisions are there in the law and are meant to protect the creditors. Once you understand these 2 basic principles, now most of the provisions will fall into place. The logic will fall into place. Now, in addition to these 2, there is something called public interest. See, sometimes going beyond investors and creditors, a company may be so big that it may have impact upon the entire national economy, in which case the public interest will also be affected, employment opportunities, so on and so forth. So therefore, a company, even if a company has run into losses, sometimes in public interest, there might be need for it to be revived, either by a way of merger or amalgamation, etc. Therefore, this public interest is also now concept being talked about. Who will decide public interest or whether public interest is affected? The central government. Okay. So the central government here, in this context, the central government is the Ministry of Corporate Affairs. So whenever I say central government, in the course of these lectures, when we say central government, CG, short form, we invariably mean the Ministry of Corporate Affairs. But then the ministry is a huge structure. Therefore, within that framework, you have the minister on top, followed by secretaries, secretary, then you have under secretary, assistant secretary. Keep on till you come to directors. right? Then you have the regional directors. The regional directors are very important because they form the hierarchy with which you and I come into contact. When you are an employee of a large company, you will be constantly coming into contact with the regional director because the regional director controls all the companies which come within his region. There are 5 regions. Each region has a regional director, right? Who usually sits in the regional headquarters. Each region has a headquarters. So Mumbai, Kolkata, Delhi, or Chennai. So these 4 regional headquarters are there. So these headquarters would think. So the regional directors below them have registrars of companies. Each state has a registrar who in turn are given control over those companies which come in their jurisdiction. You might ask, why is it all important? It is important. When we come to change in the registered office, you will understand why this concept is important for you to understand. So there is a regional director. Upar, niche you have the registrars who are smaller groups. Say, for example, Karnataka has in southern region, we have the regional director in Chennai. Then you have the Karnataka, Kerala, Andhra Pradesh, Telangana. Tamil Nadu has 2. We have one in Chennai and the other in Coimbatore. So there are so many of them. Only one other state in India has 2 registrars. Only one other state in India has 2 registrars. Tamil Nadu has 2. Maharashtra has 2. One in Mumbai and the other in Pune. So there are 2 registrars in Maharashtra. Not because of size or geographical extent, but because of the number of companies that are there. The density, the number of companies that are there per capita are more. Therefore, there are 2 registrars. Only the city of Mumbai alone needs 1. Similarly, city of Chennai alone needs 1. The rest of Tamil Nadu need 1. The rest of Maharashtra have Pune. So, this being the case, we will go into some of the important definitions. You see, there are easily about 90 definitions. Important definitions, just to enable you to be aware of what is what. So we have body corporate. It's a very interesting term, body corporate or corporation. So the word body corporate generally means any artificial juridical person is a body corporate. Okay. For the Companies Act, body corporate always means companies incorporated in India, and it includes a company incorporated outside India. So body corporate includes a company incorporated outside India. Body corporate includes company incorporated in India, plus companies incorporated outside India. Also, LLP is also body corporate. Okay, LLP is also body corporate. Any entity which has separate legal entityship, perpetual succession, is a body corporate. They very specifically want to ensure that body corporate will include a company incorporated outside India. But it does not include a cooperative society. There are no other notified bodies corporate. Body corporate does not include a cooperative society. So if you see cooperative society, under the Companies Act, it is not a body corporate. Okay. LLP is a body corporate. Okay. Now, that word company, defined in 2 subsection 20, the word company is restrictively defined, meaning in the Companies Act 2013, if you see the word company, it means company incorporated under this act, means Companies Act 2013, or any previous company law. So there was a 56 law before that. Before that, there was a 1920 Act. So there are many laws, previous company law also there. For example, the 56 Act. See, there are some companies which are older than the law. The 56 Act, older than independence. There are some companies which are incorporated under the pre-independence law. Now, these companies are also companies under the Companies Act 2013. But company means a company incorporated under this act, meaning only companies incorporated under the Companies Act or any previous company law, which means the word company does not include company incorporated outside India, whereas the word body corporate includes both company incorporated in India and also company incorporated outside India. Got it? So Reliance Industries Limited is a company and a body corporate. Reliance Industries Limited is a company and a body corporate. Okay, sir? Clear? Google Incorporated, Google Inc. is a body corporate, means it was incorporated in US, so a body corporate, but not a company under the Companies Act 2013. Samajh gaya na? You have understood? So Google is only body corporate, not company. Suppose if you have Google India Private Limited or Google India Limited incorporated in India, then that company would be a company and a body corporate. But if it's purely incorporated outside India, California, then no problem. It is a body corporate, but not a company under the Companies Act. So from now on, whenever you read a section or a provision, be careful. Are they using the word body corporate or are they using the word company? If they are using the word body corporate, that means foreign company also allowed, can be considered. But if they're using the word company, sirf company, then only company incorporated in India under this act or earlier act. Only. So this is something that you have to understand. Got it? So Reliance Industries Limited, which is incorporated 56 law, obviously, is a company. It is also a body corporate. Whereas Google or Microsoft Corporation is incorporated outside India, not a company, only body corporate. Got it? Now, the company is an Indian company is a body corporate. That sometimes you might have a doubt. That does mean Indian company is not a body corporate? No, not at all. Company incorporated in India is a body corporate, but it is also, but company incorporated outside India, it's only body corporate. It is not a company. That is what you are. Okay. A company is an artificial person created by a process of law. So you and I are natural persons. We are created by a process of biological process. Okay. Whereas a company is an artificial person. It's created by a process of law. You and I, we have brain. We have brain, mind, buddhi hai, manas hai. Okay. We have intellect. So many things. We have worries, we have joy, sorrow, feelings, so many things. Company, nothing, it is brought into existence by a process of law. It's an artificial person. It is a vehicle into which we put money. We use it as a vehicle to carry on business operations. So that way, if you, outside of your pressing need to clear this examination and whatever it is, if you really allow your mind to, sink into this topic, you will understand what a great invention the company form of organization. So only see how ingenious we are as human beings that we have created a artificial entity with which we have created so much commercial and financial growth and success. But for company, no stock exchange, no ability to raise capital without much risk. And you and I can also invest in large companies. In those days, only rich people who had second generation money could invest in company with their own capital. And they ran it. They became richer. Whereas you and I were only working hard and we were not able to become rich. But today, thanks to company form of organization being there, you and I can invest in companies. Small amount we invest. If you are able to invest in the right company, your portfolio will grow. So poor man can become rich man. Okay. Of course, rich man can also become poor man. Whatever it is, level playing field has been created by the company. True democracy has come only because of company form of organization. Right. So just having allowed you to contemplate on this. Sometimes you have to be intellectually also contemplative. then you will understand the greatness of this topic. It's not just mugging up something and vomiting the exam and clearing the exam. Definitely there, you will do it. Chalega. But going beyond that, understand the importance of this concept itself. See, you and I are getting job or getting assignment as auditors because of the company form of organization, right? So a company is an artificial person created by a process of law, separate legal entity, perpetual succession. What is the meaning of separate legal entity? A company can sue and be sued in its own name. Now, you might ask me, what is so great? Yes, it is, because a case of partnership, it cannot be sued in its own name. You have to sue the partners. Okay, even a registered firm, you can, even in the case of a registered firm, if you want, you can ignore the firm and sue the partners, because the partners have mutual agency and they are jointly and severally liable. Any one partner can be sued for the debts of the firm, entire debts of the firm. Same thing cannot be done for a company. If the company has borrowed from you, you can file a suit only against the company. You cannot file a suit against the shareholders. Okay, because later on we will tell you that the liability of the shareholder is limited. We'll see that. So the company, with the same token, suppose the company has lent money to you, the company can sue you. Suppose you have borrowed money from the company, housing loan, the company can sue you. Suppose the company has borrowed money from you as a deposit you have given, then you can sue the company, but only the company, not the shareholders. Also, the company can buy, hold, and otherwise deal with property in its own name. See, in the case of firm also, an asset can be held by a partner in his name for the firm. It can be included in the firm balance sheet. So long as that identity is there in the balance sheet that this belongs to the firm, the source came from the firm, etc. Whatever it is. But company strictly, all assets have to be held in its own name. Okay, and it has to document it and fix it as a register, and it should be shown in the balance sheet. So it can buy it in its own name, sell in its own name, and otherwise deal with it in its own name. Perpetual succession means that the company will continue to exist even if all its members die. See, death of your partner can even dissolve your firm. Sometimes you might say death of your partner will not dissolve your firm, but death of all the partners will definitely dissolve the firm. Okay. Whereas even if all the members die, the company as an entity will continue. Now, who will be the shareholders? The legal heirs of these members will automatically become the shareholders. Like that. So the owners will be there. A company being created by a process of law can be destroyed only by a process of law called dissolution. Okay. More about it when you come to final. Now we said there are limitation of liability of the members, right? So here always we mean, see, the liability of the members only is limited. The liability of the company is always unlimited. Like what I mean, the liability of the company as much is whatever amount borrowed by the company, entirely the company has to pay. The company's liability is unlimited, whereas the members' liability is limited. Please understand, if you have formed ABC Limited, all of you have subscribed for shares. Each 3 of you formed a company. Okay, ABC Private Limited. All of you invested 10, 30 lakhs, fully paid. Okay, then this ABC Private Limited started doing business, buying goods on credit, borrowing from the bank, blah, blah. One fine morning, insolvent. Assets are not sufficient to pay the liabilities. Now, at that point in time, what are the liabilities? Let us say that at that time, the creditors you have to pay, trade creditors, operational creditors, financial creditors, all put together 80 lakhs. Plus your 30 lakhs, you are also a liability. Are you able to understand? The company has to pay you. Now, what is your liability in this? Nothing, because where a company is limited by shares, the liability of its members is limited to the amount, if any, unpaid on the shares. Fully paid shares of 10 rupees. What is your liability? Nothing. Suppose the company becomes insolvent, you also may lose your money, obviously, because if the creditors itself cannot be paid, you cannot be paid. So your original 30 lakhs, swaha, gone. But no liability. Are you able to understand? the liability of the members of a company is limited to the amount, if any, unpaid on the shares. So only when there are partly paid shares, when there is something unpaid on the shares only, there is a liability. Otherwise, for fully paid up shares, 10 rupees share fully paid up, then no liability. Okay. Of course, there is a chance that you might lose even that the company may become insolvent. Its assets may not be sufficient to pay its liabilities in full. Then the share will go down below value. It may become penny stock. But your 10 rupees, it may become 2 rupees. But that's okay. But no more liability for you. Okay. In the same way, many cases, companies may be formed not for profit, but to carry on some objective. In which case, the members may be able to raise donations for their activities. So they may not, or subscription for their activities. So they might not want any capital. So they might say, to be on the safe side, in case the company is wound up and some amount is to be paid, we will all guarantee. So some 5 people will say, whatever happens, in case there is any need, to 20,000 I will guarantee, another 20,000, 1 lakh guaranteed. So 5 people together, they've guaranteed 20. Nothing will be paid. It will be mentioned, guaranteed amount so much. So in case the company is wound up, assets are not sufficient to meet its liabilities, then for the deficit, for the amount shortfall, each person has to pay for his guarantee. So company limited by guarantee means the amount plus the company members may respectively undertake to contribute. They agree to contribute to the assets of the company in the event of its being wound up. Of course, the concept of unlimited liability is there, means company not having any limit on the liability of its members, meaning there is no limit. Once you say you're a member of an unlimited liability company, whatever may be the debts due by the company, you have to pay. The liability is unlimited. It's dangerous. Why they will do this, God only knows. Whether there are any unlimited liability companies, no. There are no unlimited liability companies. But the provision is there in the law because in some cases, a firm which has been working as a firm may want to get wound up or liquidated under the Companies Act. It's an unregistered company. Those cases, they are entitled to come here. So they'll become unlimited company because there won't be any liability. Otherwise, the concept of unlimited liability may not be very relevant to you. So don't break your head on that. Now, small conceptual issue. Just for your information, during the peak pandemic, May 2020, Reliance Industries Limited came out with an offer of rights shares. Okay. When we come to share capital and debentures, maybe I will tell you a little. Basically, if you are an existing shareholder of company and the company wants to make a further public offer, before doing that, they have to make a rights offer. They have to offer these shares first to the existing shareholders in proportion to their existing holding. So anybody who was a shareholder in Reliance automatically got some shares. So the price offered was 1,257. Okay, 1,257. The point, of course, the rights offer was made. The amount payable was in 3 installments. So for the first time in a long time, the company had come out with partly paid shares. You see, Reliance Industries at that time went for a FPO just for collecting a small amount. So the entire amount they did not want. Their valuation was pretty high, 1,257. They did not want the entire amount. So they took only 314.25. They took only this 314.25 on application. They took this amount. The rest of it, they said you pay later. They are supposed to have made a call in May 21 and November 21. They are now in 24. They have not made the call yet. These partly paid shares are being still traded. Partly paid shares of Reliance Industries are traded on the market. Okay. Now, it so happens when Mr. Deepak applied for the right shares and he was allotted 100 shares. What is his liability? Obviously, you have to total up 314 and 314.25 and 628.5 into 100. Correct? That will be the amount he has to pay. That is 314.25 plus 628.5. 942.75 into 100. 94,275. That is the amount he has to pay. That is the amount of liability for 100 shares. He has to pay 94,275 rupees. Correct? Now, while you are on capital, let's quickly go through it. Later on, yes, we might come to capital again in a different context, but we'll get this behind us. See, sue means to file a suit, to file a case in the court. So a company can file a case in the court. See, when I, Mr. Abhishek Kumar, what is the meaning of sue? Sue means to file a suit. Suit means case in the court. Suppose X borrows 3 lakhs from Y and agrees to repay in 3 months. X borrows 3 lakhs and agrees to repay in 3 months. He does not pay. 3 months later, he doesn't pay. Then Y can sue. Y can file a case against the X in the court of law. Okay. Now, which is bigger, company or body corporate? If you're looking at it as from a Boolean perspective in terms of set theory, the set wise, body corporate will be a bigger set. Now, see, body corporate will be bigger. It will include company incorporated in India, company incorporated outside India, other bodies corporate, other than, it's bigger term, even under the Companies Act. Okay, it is quite big. So if you're looking at it purely from a Boolean perspective, as a set theory perspective, yes, body corporate is a bigger than company. That is the question. It is bigger than company. Okay. Right. So for a sole proprietor, capital is a balancing item. It is excess of assets or liabilities. Straight away. What if the liabilities are more, then gone, file insolvency, go. If the assets are more, sell the assets, pay. Even the personal assets can be attached. Therefore, the capital of a sole proprietor is always changing now. Opening capital, had profit, less drawings. So all sorts of entries are made in that account. Am I correct? See, whatever you do with the capital in the balance sheet, creditors are not bothered because they can go beyond the balance sheet. Even if an asset is not there in the balance sheet, if it is the name of the sole proprietor, they can take it. Therefore, they are not worried. Whereas, when it comes to company, even for a partnership firm, the same. Except that now there are, instead of 1 guy, there are 4 guys, 3 guys. But any one of those guys, I can take the personal asset. Even if it is not there in the P&L, in the balance sheet of the partnership, I can sue him. For the debts of the firm, I can sue him. And then he has to collect from the others. That is up between them. So as I am concerned, I will collect it from him. That's it. And go. He has to pay. Partners are jointly and severally liable to the creditors. So unlimited liability. Okay. You have to be very careful. Whereas, once we come to company, the liability of the members of the company is limited. The liability of the members of a company is limited. Right. Creditors cannot attach the personal assets of members. Right. Therefore, the share capital of a company has to be a fixed amount. Cannot be withdrawn. Cannot be touched. It will be shown separately. If you look at it diagrammatically, I will show it to you when we come to SCD, share capital in debentures. It will be like a grid, okay, of small squares. Imagine there is a grid with small squares. Each square is called a unit. That unit is called a share. Okay, so we can say a company has 5 lakh shares of ₹5 each. That means 5 lakh small squares are there, equal size. Equal size. each equal sized square will be called share. That is why they say share means a share in the share capital of the company. What do you mean? Share capital is a larger grid, in which case, in this grid, in this bigger grid, there are lines, horizontal, vertical. Maybe I'll even show it. It will be easier. Actually, I can do that. See, imagine, I'm not drawing it to scale. This is a grid. Now, each one of these, each small square is a share. So the entire grid is called share capital. The entire grid is called share capital. Whereas each small, this entire grid is called share capital. Whereas each one of these small units is called a share. Okay. So now you understand? Share means share in the share capital of the company. So each are equal size. The great advantage in this, my dear friends, because shares are freely transferable, which means you buy 10 of these units today. Tomorrow you don't want it, you can sell it to me. That is how markets are emerging. When you don't want this share, you can sell it to me. If you feel that's enough, you sell. We don't have to inform anybody. Same can happen. Since you are buying the share from me or I'm buying the share from you, I have to inform the company that I'm the new owner. That is all. Otherwise, shares are movable goods, can be transferred by mere transfer of possession. Ownership in movable goods can be transferred by mere transfer of possession. Okay. So that way it is, shares are very important. Now the share capital, this bigger grid, it can be again broken up into smaller parts, subdivisions, based on the payment. See, the authorized capital or nominal capital, this will be mentioned in the memorandum, is the maximum amount which the company can collect by way of share capital, total amount. This will be mentioned in the memorandum. Whereas issue capital, that portion of the authorized capital which the company has made available for subscription, it is issued. The company invites the public to make an offer for it. So the public will subscribe, or the shareholders will subscribe. The applicants will be there, subscribe. That portion for which applications have been received. So authorized capital is there. Out of that, I take a portion and I inform the public, these shares are available. If you want, you can apply. We issue a prospectus. Then they make application. Once they make the application, I will allot the shares. So the application is received from the applicant. Then the board of directors meet and they allot. So the application is the offer. The allotment is the acceptance. Once that is over, share comes into existence. The share comes into existence once it is allotted, at which point in time it becomes subscribed capital. Thereafter, the liability is crystallized. Whatever is to be balanced to be paid, they have to pay. To the extent that calls have been made, it is called called up capital. Whereas fully paid, then it is called paid up capital. To the extent that the money has been received by the company, it is called paid up capital. Right? So, this problem is there. ABC Limited was registered with the registrar with an authorized capital of 2 crores. In response to the advertisements, the company applications have been received for 10 lakh shares. So their authorized capital is 2 crore. Means 20 lakh shares of 10 rupees each. They have only taken 7 lakh of these and offered to the public and said, if you want, you can subscribe. Applications were received for 10 lakhs. Please be careful. The issued capital is 7 lakhs. The subscribed capital is also 7 lakhs. Do not confuse 10 lakhs. Merely because 10 lakhs money has come doesn't mean subscribed capital is 10 lakhs. Subscribed capital is only 7 lakhs. Be very clear. You issued 7. So You have to be very clear on this. Don't get confused. You issued 7. They applied 10. But you can allot only 7. Balance 3 lakh ka money you have to give back. Okay. So, on this 7 lakh shares, you would have received 8 rupees per share. Because the amount called up is only 8. So, only on 7 lakhs. Whatever amount, see on application, let us say you had 2 lakhs. On application, 2 into 10 lakhs, 20 lakhs would have come now. That entire 20 lakhs you cannot take. You can only take 2 into 7, 14 lakhs. 2 rupees per share into 7 lakhs. Keep balance 6 lakhs. Either you return it or you keep it and adjust it against next installment. First call, allotment, whatever. Keep it. But you cannot allot 10 lakh. Be clear, sir? No doubt about it. 7 lakhs. So 7 lakhs is the issued. 7 lakhs issued, 7 lakhs subscribed, 7 lakhs called up, 8 rupees per share. 7 lakh shares called up, 8 rupees per share. So the authorized capital is 2 crore, 20 lakh shares of rupees 10 each. Issued capital is 7 lakh shares of rupees 10 each, 70 lakhs. Subscribed capital is also 7 lakh rupees of rupees 10 each. Out of that, called up is only 8 rupees. Balance 2 rupees is still uncalled. It won't figure in the balance sheet. The uncalled capital will be kept separately. It is a kind of contingent liability for the applicant. For the applicant, it is a contingent liability. From the accounting perspective, be clear. As far as the applicant is, suppose the applicant is the company and you are certifying the balance sheet of that company, you should disclose the contingent liability. Because if the call is made by this company, that company liability will be there to pay. Therefore, though that liability has not come, it is a contingent liability. I'm going tangential, I know, but then we have to relate the topics now. See, A Limited has issued shares, B Limited is buying, it's a partly paid share, 5 rupees to be paid. That unpaid portion and uncalled up part, 5 rupees. For B Limited, which is the applicant, that 5 rupees is a contingent liability. It has to be disclosed very clearly. Whether there is any contingent liability on the share. So called up capital 7 lakhs, 7 into 8, 56. Now, unfortunately, out of this 56 lakhs, 3 shareholders are still owing that final call money. They are not paid 2 rupees on 6,000 shares. Means 2 into 6, 12,000 rupees not paid. So this 12,000 rupees is called calls in arrears. Calls in arrears and has to be reduced. So what we'll show is paid up capital, 56 lakhs, less calls in arrears, 12. So 55 lakh 88, go to the inner column. Outer column will have only 56 lakhs. Okay. So this is how we will have to show it. This is just as I told you, I'm only highlighting. There are some other terms which I am not covering here. If you ask me, I will cover, but some of them, will be relevant later. For example, net worth will become very relevant when we come to deposits, right? Charge itself will be defined in charges. So there are many words which will be redefined again. At fixed time, you will see it. Don't worry. Ms. Satya Gupta has a nice question. Before I go to this topic, let me quickly take that. Is there any difference between liquidation and dissolution? There is a basic difference. See, liquidation is the process of ending a company. Meaning, if you are the liquidator of the company, what is your job? You will have to sell all the assets, prepare a list of creditors, see the priority, decide who will get how much. The rules are there, very elaborate rules are there. You will follow those rules and you will distribute the money. Finally, no creditors owed money or nothing can be paid further. Then you will report to the tribunal. And then the tribunal will hear the matter, ensure that everything has been done. Then the official liquidator will give a report that everything has been done correctly, everything over. Then the tribunal will pass a final order of dissolution. Once that order is passed, the company is officially dead. That is dissolution. The dissolution is the process by which the company is killed. But liquidation is the process by which this company is slowly brought to an end. In a way, you can say liquidation is the process the product, the culmination of which is dissolution. If the liquidation is done properly, you will get a dissolution order, and with that, kadam ho gaya, the company is out. So this is the basic difference between liquidation and dissolution. Okay. The purpose of liquidation is dissolution. Okay. I have been the liquidator of many companies, easily about 5 or 6 companies. I've been not more than 10 companies, but technically 6 companies, I was official. The other 5 companies, my father was the liquidator, and then I continued the liquidation. Once he retired, I continued the liquidation. That went on and on and on. These companies will never refuse to die. So because some disputes, property sale will take time. I can't take a risk there. I don't want to be seen as doing anything wrong. So I will tell clearly, this is what I'm able to do. If you can do better, now I'll give one more chance. So it takes time. Finally, we sold the property and paid off the creditors. Something was left over. We called a meeting of the shareholders. Take it, go. They were all happy, signed. Then dissolution. Finally dissolved. Okay. Very interesting topic, company law. Actually, if you like it, you should like it. 2 reasons. One, because of this only, you are going to get a job as a company in the company as a senior accounts person. You're going to get, because of this law, only there's a company. The company will be your employer. Your employer will not be a human being. Remember, your employer will always be an artificial entity, a company. You will be appointed by a company only, not by the MD. Your appointment is by the board of the company on behalf of the company. They are only agent. If you really ask yourself, who is my employer? You'll say Reliance Industries Limited, the company, not Mukesh Ambani. You are employee of Reliance Industries. Remember, see, this is why. That is separate legal entityship, right? Suppose you're going to file a suit against the company. Later on, some reason you as an employee, you want to file a suit. You won't file it against the directors, boss. You will file it against the company, right? So, Mr. R.K. Sharma versus Reliance Industries Limited. That's how the case state. That's what we mean by sue and be sued in its own name. You will file a suit against the company. Okay. Now, some kinds of companies we will see. There are many kinds of companies. We are only seeing a few examples here. One is obviously the public company and private company. So, see, earlier, private companies enjoyed many liberties and freedoms. Today, they are equally covered by the law. There is no major concession. But still, the private company form of organization is found suitable, where you are operating very small scale, where you don't want big thing, but you want the power of limited liability. Then you opt for forming a company, in which case it will be better to go for a private company rather than a public company. Slightly more compliances are there. But today, the compliance-wise, it's only a marginal difference. But still, we don't encourage entrepreneurs to form public company straight away. We ask them to go for private company and then public company. So, wow. 1 second. Okay. Now, looking at public company and private company, the word public company is defined negatively. Means public company is one which is not a private company and has a minimum paid up share capital. No minimum share capital has been, as of now, prescribed. It was there in those days, it was 1 lakh. Now they have not prescribed any minimum. Even 20,000 rupees, no problem. Go ahead. Now, a company, so basically public company is one which is not a private company and has a minimum paid up share capital as may be prescribed. But a company which is a subsidiary of a company, not being a private company, shall be deemed to be a public company. See, when you say deemed to be a public company, it doesn't mean that it can do everything that a public company can do. No, because its articles will continue to have the 3 matters which we are going to talk about. The private company will continue to have the prohibition and all. So, but the law will apply to this company as if it is a public company. the compliance of this company should be the same as public company. Okay. So when a private company becomes a subsidiary of a public company, it shall be deemed to be a public company, right? Does it mean that that company can go public issue? No. That private company will continue to have all these negatives. Therefore, if at all they want to go public, what they should do? They should remove these clauses and then they have to. It's as good as convert it into a public company. So deeming, the idea of deeming, if you are violating, if you have become a subsidiary of a public company, the law will apply to you as if you are a public limited company. So whatever is applicable to a public company will apply to you. That's what it means. Okay. So this is what they mean. It will be deemed to be a public company for the purpose of this act, even where such subsidiary company continues to be a private company in its articles. So basically, a private company may become a subsidiary of a public company. It may continue to have prohibition, etc. But it will be treated as if it is a public company. So A Private Limited is a subsidiary of AB Limited, a public company. Now A Private Limited wants to avail the exemptions available to private companies. No. Can it do so? No. Because it's a direct subsidiary, therefore it will not be allowed to avail the exemptions, right? Now, private company is elaborately defined. Private company means a company having a minimum paid up share capital. See, for public companies in those days, it was 5 lakhs. For private companies, it was 1 lakh. Now, there is no minimum prescribed capital as of now. Okay. And so, private company will have the minimum paid up share capital and plus, by its articles, it has to provide for 3 matters. It has to provide for 3 matters. What are the 3 matters? 1. A private company shall, by its articles, 1, restrict the right to transfer its shares. Friends, they are only talking about restriction, not about prohibition. So, if you are a shareholder of a private company, you cannot sell your shares directly to an outsider. Before you do that, you have to offer those shares to the existing shareholders. If they are not able to take, or they are unable to take it, or refuse to take it, then and only then can you sell these shares to third parties. It's only reasonable restriction. There is no prohibition. Also, except in the case of a one-person company, it has to limit the number of its members to 200. So, number of members of a private company should be restricted to 200. Joint shareholders shall be treated as a single member. Now, this above limit of 200 members shall not include employees and former employees. So, employees and former. But those former employees should have been members of the company while in that employment and have continued to be members after the employment ceased. So, the former employee, after he ceases to be an employee, if he buys the share, he will not be counted in that category. Mr. A was employed by a company, X Limited. He quit the company, came out, then he became a shareholder. He bought the share. Is he a former employee for this purpose? No. When he was in that employment, he acquired the shares and continued to hold the shares, be a member even after the employment ceased. Only then former employee can be considered. So here is a nice suggestion, sort of thing. Flora Fauna Limited was registered as a public company. There are 230 members in the company, right? So you have directors and their relatives, employees, ex-employees. Shares were allotted when they were employees. 5 couples holding shares jointly, husband and wife. So, totally 10. Others, 145. Now, the board wants to convert it into a private company. Though it's a public company, they want to become a private company. They can do so only if the number of members is within the limit, not 200. So, advise whether the reduction of members is necessary. So, to count. Directors and employees to be taken. Director and employees to be taken. Employee, no. Former employee, no. 5 couples holding shares jointly can be considered as 5, not as 10. joint shareholders shall be treated as a single member. So this will be only 5. So we have 50 plus 10. 50 plus 5, 55 plus 145 remaining people. They should be taken. So 55 plus 145 gives me exactly 200. There is no need for any reduction. I don't know why I lost the query pad. I was going through it. Suddenly I lost it. What to do to get back? Now we will see holding company. We saw a holding and subsidiary. We saw here the concept. Now let's see the definition. Again, so holding and subsidiary. The word holding company is not given full definition. They are saying holding company in relation to one or more other companies means a company of which such companies are subsidiary companies. So if a company has subsidiary, it is a holding company. If there are subsidiaries, then it is a holding company. That's what it means. Holding company in relation to one or more companies means a company of which such companies are subsidiary companies. That means if you say this is a subsidiary, that is the holding company. So immediately you'll ask that question now. Hey, when is what is the subsidiary? We will tell you. So subsidiary will be defined. Holding is not defined. One other way of looking at it. Who came first? Father or son? Parent or child? Who came first? Who came first? Parent or child? Think. Child came first. How? Only when the child is born, the parent will become a parent. So if suppose there is no child, where is the parent? Only when there is a child, we will say, hey, he is a father, she is a mother, parent, like that. So the child come first, then only the parent will come. So if you think like that, then only if there is a subsidiary, that subsidiary holding company will become holding company. Got it? So they are trying to give all sorts of intellectual examples, but the point is, when there is a subsidiary, with respect to that subsidiary, whoever is holding is called holding company. Agreed. Who is our subsidiary then? That is defined. Subsidiary in relation to any other company, that is to say the holding company, means a company in which the holding company controls the composition of the board of directors. So the holding company is able to control the composition of the board of directors. What do you mean? They are able to appoint or remove all or a majority of all the directors. See, how can I control the board of directors of that company? I shall be deemed to be able to control if that other company, there is a holding company, by exercise of some power, can appoint or remove all or a majority of the directors. See, let us think like this. Suppose A has a joint venture with B. By virtue of the joint venture, A and B are 50-50 partners, for example. But A can appoint 5 directors, B can appoint only 4 directors. Imagine. That means, because of the joint venture agreement, I have the power. And if I exercise that power, by the exercise of some power, exercisable by it, when I exercise that power, I can appoint 5 directors, majority. of the 9, I can appoint 5. That means I can control the composition of the board. Though we are equal partners. Share capital wise, I am 50, you're 50. But the joint venture agreement gives me that right to appoint 6 directors. I'm sorry, 5 out of 9. Now, so this is how the subtle shifting of the table. Whatever it is, I get control over it. The other one is very simple. Exercises or controls more than 1/2, means 51% or above of the total voting power, either at its own or together with one or more of the subsidiary companies. So I may not hold it. See, let us say, for example, there's a company, A Limited. It has a subsidiaries, B and C, right? Now there's one more company called S Limited. Now, all are holding shares. Let us say. So A is holding shares in S Limited 30%. B and C are holding 10%, 10%. So B and C are holding, for the sake of 20%, C is holding 20%. So together, 30 by A, 20 by B, 20 by C, 30 plus 20, 50 plus 20, 70%. So exercises or controls more than 1/2 of the total voting power, either on its own or together with one or more of its subsidiaries. So here in S Limited case, I am able to control along with my subsidiaries, I can control more than 50%. Then automatically S Limited will become my subsidiary. So control will include the right to appoint majority of the directors or to control the management or policy decisions. Okay. This could be done through any method, including virtue of their shareholding or agreement or voting arrangement or whatever. Now, a company shall be deemed to be a subsidiary of the holding company, even if the control is of another subsidiary. Therefore, in other words, subsidiary of a subsidiary is a subsidiary. Chain holding. ABC Limited holding company holds 60% of paid up share capital of BC. BC in turn holds 51% of XYZ. Then XYZ will become subsidiary of ABC Limited. XYZ Limited becomes a subsidiary of ABC Limited by indirect control through BC Limited, a second level subsidiary. See, another one more peculiarity. Suppose BC is a private limited. Then, even though BC private limited, because of this, XYZ will become a subsidiary of ABC Limited, which is a public company. Therefore, XYZ Limited also will become deemed to be a public company. Further, okay. They also insist that, you should not have more than 2 layers of subsidiaries. So we can say this is L1, this is L2. Below this, you cannot have one more subsidiary. Below XYZ, you cannot have one more subsidiary. No. Only last level is second level. So they say second level subsidiary cannot be done, not allowed. No company shall have more than 2 layers. Exemptions are there. These companies can have more than 2 layers. Banking company, non-banking company, insurance company, government company. They can have more than. A company may acquire a company incorporated outside India, okay, with subsidiaries beyond 2 layers as per the laws of such country. Suppose you are acquiring a foreign company incorporated outside India. For that company's rules, they can have more than 2 layers, then you can have. But in India, other than the specified companies, you cannot have more than 2 layers. Specified companies like banking company, non-banking and all can have more than 2 layers. Okay. Associate company means a company in which that other company has a significant influence. which is not a subsidiary company of the company having such influence and includes a joint venture. Significant influence again means control of at least 20% of the total voting power or control of or participation in business decisions. So there may be a joint venture agreement by which we have to be, as I told you, we have control over the company. Whatever it is, it becomes an associate company. Small company means a company other than a public company. So please note it, my dear friends. Small company means other than public company. So the minute you say small company, remember it should be only private company. It cannot be public company. Also, it has to satisfy two more conditions. Friends, this was amended recently. So 2022, it was amended. So just for information, please note it. So basically the section, okay, talks about 50 lakhs and 2 crore, right? Paid up share capital does not exceed 50 lakhs or such higher amount as may be prescribed. So they prescribed the higher amount of 4 crores. Okay, they have prescribed. In the original section, you will find 50 lakhs, but the central government has been given the power to prescribe higher amount. So based on that, they have prescribed already 2 crores. Now they have prescribed 4 crores. Okay, 4 crores they have prescribed. So 4 crores, up to 4 crores, it is still small company. Paid up share capital is 4 crores. But the total, see, the central government has the power to prescribe. But the maximum amount up to which they can go is 10 crore. Right now, they have only come up to 4 crore, right? Right now, they have come only up to 4 crore. Right now, they have come only up to 4 crore. They can go up to 10 crore. The higher amount can be prescribed up to 10 crore. But there's a ceiling there. The ministry says, the parliament says, up to 10 crores central government can have. Beyond that, if they want to prescribe, no, we decide. So the reason they are given this freedom is inflation is going up here. So 10 years down the line, 4 crores may be nothing. So they want to increase it. Up to 10 crore, they can keep increasing. Okay. As of now, 4 crores. The section prescribes 50 lakhs, gives freedom to the central government to prescribe higher amount. The central government has prescribed 4 crores on 59/22. Maximum amount up to which the central government can prescribe is not more than 10 crore, which they have not yet touched. Only 4. Another 6 crores they can, if they want in future, they can go. Have you understood? Because many people have doubt on this. So all you need to remember is this, what is the paid up share capital of the company? Both preference and equity put together. Is it less than 4 crores? Yes, tick. And in addition to that, simultaneously, turnover has to be seen. For the immediately preceding financial year, audited report, balance sheet, P&L. Does the turnover is the turnover 40 crores? Because the section speaks about 2 crores. Now they have prescribed higher amount as 40 crores. So if it is paid up share capital less than 4 crores, turnover for the last immediately preceding financial year less than 40 crores, then small company. If any one of the condition is not satisfied, it is not a small company. Okay. Similarly, small company provision cannot apply to holding or subsidiary. Suppose the subsidiary is a private company satisfying both the conditions, still it will not be small because it is a subsidiary company. Got it? Holding and subsidiaries are not covered. Company registered under Section 8 is not covered. So a company registered under Section 8 as a non-profit organization or as a not-for-profit cannot claim this benefit. Also, a company or body corporate governed by any special act cannot become a small company, even though it satisfies these two criteria. As per the profit loss account of the previous year, 31st March 2019, S Private Limited, turnover was 1.5 crores and paid up share capital was 40 lakhs. See, now, S Private Limited is the subsidiary of H Limited. H Limited is holding 51% of the paid up capital. Now, can S Private Limited be classified as a small company? Big. See, it so happens it is satisfying both the criteria. Paid up capital less than 4 crores. Turnover less than 40 crores. Correct. Paid up capital 40 lakhs, less than 4 crores. Turnover 1.5 crore, less than 40 crore. But still, S Limited cannot be classified as a small company because it is a subsidiary of H Limited. Even if H Limited is a small company, it doesn't matter. Even if H Limited is also, it's also not going to get small company status because section does not apply to holding and subsidiary. Holding company, okay. Be very careful. In the exam, you might get a problem like this where it appears to be satisfying both the conditions. Immediately don't rush to say it is a small company. Check up whether it comes under one of these categories. MNP Private Limited is the company registered under the Companies Act with a paid-up share capital of 80 lakhs and turnover of 50 crores as per the previous year. It's profit and loss. Can an MNP Private Limited avail the status of small company? See, what are the conditions? Paid-up share capital should not exceed 4 crores. 80 lakhs, less than 4 crores. Turnover should not exceed 40 crore, whereas here it is 50 crore. Therefore, since one of the conditions is, both the conditions should be satisfied now. But the second criteria for turnover has not been met. Therefore, since both the conditions are to be met, they cannot avail. Will your answer be different if the turnover is 35 crores? Yeah, because if the turnover is also 35 crore, then both the conditions will be satisfied. You can become a small company. It will be treated as a small company. Government company definition is also there. Any company in which not less than 51% of the paid-up capital is held by central government, state government or governments, and central government or state government, and partly one or more state government. So fully central government is holding 51%, or one state government and or more than one state government and central government, or two state governments, or central government and one or more state governments. Whatever combination, if 51% is held by government, then it is a government company. Subsidiary of government company is a government company automatically. Subsidiary of government company is government company. Okay. Now the shareholding pattern of Bharat Biogas Limited is as follows. There is no such company. It's a fictional company. Just for the example we are giving. Bharat Biogas. Okay, is it a government company? See, central government is holding 30%. State government is holding 15%. So total 45%. NTEC Limited, which is a real company. There is a company called NTEC Limited. Okay. It's a joint venture between NTPC and TANGEDCO, the Tamil Nadu Government Electricity Corporation. Okay. TNEP and now it's called TANGEDCO and NTPC. They have a plant, power generation plant, which is run by NTECL. Right? But NTECL is a government company. NTECL is a government company. Now, think about it. Neither central government, nor state government, nor in any combination, they are holding more than 51%. Fact that the government company is holding 30%, not having any effect. So, as it is, Bharat Biogas Limited is not a government company. Why? Because central government is holding only 30%, state government 15%, even if we total both of them together 45%. NTECL not to be considered. It is a government company. Suppose NTECL, suppose the state government of Tamil Nadu sells 15% stake to NTECL, then NTECL will again still be holding only 45%. So, unless the government company becomes a holding company, Bharat Biogas will not become a government company. Okay. Before we say goodbye to this preliminary topic, let me cover a few topics like one more topic like relative. See, the word relative you will find in various places in the Companies Act. Even in final, when you're doing a self-paced study, you will come across the term relative. So be clear on the word relative is very restrictively defined in the Companies Act. Very restrictive. And so the word is defined very restrictively. And I don't see any more queries in the query pad. In case you have queries, do ask it. No problem. We can take it. So relative is restrictively defined. Only that these are relatives under the Companies Act. Members of Hindu undivided family are related to each other. Co-partners are related to each other. Husband and wife are related to each other. Unfortunately, yes. Husband and wife are related to each other. In addition to this, only these are the relatives. Yes. Wife is already here. My dear friends, don't ask where is wife, because without wife, how you will create son, daughter, and all. So wife is relative. In addition to that, you take individual, me, father, mother, ma or ba, mataji or pitaji or mataji. Then brother, sister, okay, bhai or ben, brother and sister. That's all. So bhai or ben, their husband, wife, nothing. Then beta or beti, then their husband, son, that is husband or wife, as the case may be. Okay. So son-in-law, daughter's husband, and son's wife. They're covered. So how many relatives are there? Father, mother, brother, sister, son, son's wife, that is daughter-in-law, daughter's husband, son-in-law, then wife, of course. 9 relatives. That's all. And how many ever HUF related? 9, technically 9. If you include the wife also, that is 8. 8 plus 1 wife. Only. Note the missing points here. Wife, father, mother, brother, sister. No. All the in-laws are outlaws. Okay. All the in-laws are outlaws. So this has some planning possibilities. Suppose you want to do some transactions within the framework of the company law, you want to use the relatives. Remember, brother-in-law is not a relative, father-in-law is not a relative. Both the brothers-in-law, sister's husband is also not relative, wife's brother is also not relative, brother's wife is also not relative, sister's husband is also not relative, wife's sister also not relative. All that you can take. One more peculiarity. See, my son-in-law, my daughter's husband, is my relative. For me, looked at from my perspective, my son-in-law is my relative. But looked at from his perspective, I am not a relative. See, it's a double-edged knife. Na? When I am son-in-law, I told my father-in-law, you are not my relative, get out. But when I am father-in-law, now my son-in-law can say, you are not my relative, get out. Because father-in-law is not a relative for the son-in-law, but son-in-law is a relative for the father-in-law. So very confusing now, but be careful. That's why when you're planning, you have to be very careful. If you argue that, sir, son-in-law, father-in-law is that, but be careful. Son-in-law is related. So that one area, don't go and get into trouble. That's the point. Okay. Okay. So father includes stepfather, stepmother, stepson, stepbrother, stepsister is also there. But they are all relative. And stepdaughter alone is not covered. I don't know why. They only say daughter. No one says stepdaughter. So this is with regard to the topic called preliminary. Before we take up the next topic, if you have any queries on this topic, yes, feel free to raise it now. I'm not able to see many queries. After Suganya's thank you, I don't see any more queries, which I have answered all of them. Excuse me, sir. Am I still online? Yeah. Now, can I have a small break for 3 minutes, 5 minutes? Up to now, everything was there, no? Pakka, na? Everything went off well. Up to now, my lectures are going pakka, na? No problem, na? Okay. Welcome back from that very short break from more for me to have a cup of green tea. Now, we go on to the next topic, which is incorporation of companies. Give me 1 minute, I will. So we have seen some preliminary topics. Now we move to the concept of incorporation. Incorporation, the English word incorporation, comes from the Latin root, which is corporare, which is basically to give entityship or bring into existence. Incorporation. Okay. So when you incorporate something, you bring it, you give it body, and you give it, corpus is body. Corpus in Latin is body. So corporation is giving body. In this case, body is not given, but the concept of the company is brought into existence. Incorporation. This is a process of law. Clearly defined process of law, which basically is an agreement. Okay, a company comes into existence because the minimum number of persons mentioned below may form a company for any lawful purpose by subscribing their names or his name to a memorandum. Why it says his name is because of one-person company. A single person can sign the memorandum and form a company. Whereas public company, 7 or more persons. Private company, 2 or more persons, okay, can sign a memorandum and they can form a company. Memorandum and article. Once they sign the memorandum, basically that's nothing but 7 people agree to form a company. 2 people agree to form a company. 1 person says, I am forming a company. Immediately company comes into existence. Can you imagine, like in those days, in Mahabharata, we have this story, of how this guy, what is his name? Drupada, okay, he creates a yagam and from that yagam, Draupadi comes, okay, and Drishtadyumna comes. So they just come out of the yajna. Similarly, from this 7 or more people ka agreement, company comes into existence. 2 or more people ka agreement, company comes into existence. 1 person signs, company comes into existence. I mean, magical moment, legal magic creates a new entity different from the 7 people. 1 more entity has now come, different from the 7 people, separate legal. That is what it means. When the partners sign the firm partnership deed, a new person does not come. An association is formed, that's all. Whereas when 7 or more people sign, a totally different entity comes into existence, it has its own life. It will be, they may all sell their shares and go, still the company will go on. Okay. Now, I hope you got the point here. So, main purpose why we form all this, because we want to enjoy limited liability. The members want to have limited liability. Therefore, they form a company. No. In some cases, even though they have formed a company, with liability of members being limited, the members may become have unlimited liability. When is it possible? For these 3 conditions have to be fulfilled. If these 3 conditions are there, then the members will become severally liable. Severally liable means the creditor can sue any one of them for the entire amount. That's what meaning of severally. Suppose A, B, and C in partnership, they incur debts. I am the creditor. I need not sue A, B, and C. I can sue A alone for my entire debt. B alone for my entire debt. C alone for my entire debt. For safety, I can include A and B. But once I get the decree, I can proceed against the personal property of any of them. Whoever has property, I will go. So that is called several liability, jointly and severally. Jointly means once I collect from B, B will have the right to collect from A and C. But to me, he has to pay the full amount. Okay. So this several liability is very dangerous. Now, when will this happen? First, the number of members shall fall below the statutory minimum. Okay. That is to say, less than 2 in the case of private company, 7 in the case of public company. So the number of members should fall below the statutory minimum, whatever it is. In the case of OPC, that is not possible to indicate. The case of OPC, one person dies, that's it. That is why in OPC, we will have another criteria. There will be a nominee. The minute this one person dies, that nominee will become the shareholder. So OPC, they have covered it. And that nominee should nominate somebody immediately. So that cycle has been created there. Whereas in the case of other type of companies, if it falls below the minimum of 7 or 2, then, and if the company carries on the business for more than 6 months after the number is so reduced, then the remaining members, see, for 6 months, nothing will happen. No unlimited liability. 6 months time is given to increase the membership. These members are not doing anything, keeping quiet, and being aware of this reduction, they carry on the business beyond 6 months. So, number falls below the statutory minimum. 6 months, the business is continued. It is okay. Once 6 months is over, the remaining members who are aware of this and carry on the business beyond 6 months, they become jointly and severally liable for the payment of the whole debts of the company. Then the remaining members who are aware of the reduction shall be severally liable for the payment of the whole debts of the company. Severally liable means each one is liable for the entire amount, and the creditor can sue any one of them for the entire amount. Okay. For the payment of the whole debts of the company contracted during the time it carries on business after those 6 months. Please, I have highlighted it for you in pink. For the 6 months, no problem. 6 months, kadam ho gaya. Then the next day, first day onwards, any debt incurred, the remaining members who are continuing the business beyond 6 months will be severally liable and can be severally sued for that. Okay. See, here's an example. Amar, Akbar and Anthony, along with 5 of their friends, were members of Harmony Limited. Wonderful. They are very happy about it. Now, Amar killed Anthony. Wow. Killed her. Okay. Amar killed Anthony and Akbar on 18th August 22. Hence, whatever, we not bother about their personal animosity. All we know is that Amar killed Anthony and Akbar on 18th August 22. Hence, the number of members reduced to 6. Because Amar, Akbar, Anthony, and 5 are their other friends. We don't know what their religion is. But these Amar killed Anthony and Akbar on 18th August 2022. Nothing to do with the date, huh? Don't worry. Okay. Hence, the number of members reduced to 6. And the remaining members were aware about it. Obviously, Amar will be in jail. Don't forget that. Because you can't kill Anthony and Akbar in a democratic country like ours and escape. So the number of members reduced to 6. And the remaining members were aware about it, about the reduction. Now, Harmony Limited continued its operations without increasing the number of members. Right, sir? So, on 18th August, number got reduced now. So, September, October, November, December, January, February, March 17th, 2023. March 17, 2023. Okay, if you don't go by the exact dates, 6 months will get over. So, after March 17, 2023, assuming the company took a loan for business purpose and defaulted. Please note, from 18th August to 17th March, no problem. Whatever debt is incurred, company only is liable. None of these people are liable. But beyond 17th March, one more day they continue. They borrow money. Even for business purpose, the company borrows. Then and there's a default. Then the lender of such loan can sue the company. Of course, they can sue the company. Company's liability is still there. or Amar or the remaining members. Of course, Antony and Akbar, nothing can be done because they are there. So because such members shall be severally liable for the repayment of the said loan. Okay. This is the basic steps for incorporation. Sometimes you'll be asked. So if you want to bring a company into existence, then this is what you have to do. First, you have to reserve the name by filing an e-application. See, today it's a joint application. You file for the incorporation. First, you file the e-application for name. The name is approved. Then straight away you upload the memorandum and articles, etc. This will be reviewed and the company will be incorporated. Okay. Also, in case you are having any directors being appointed or nominated as directors when the company is incorporated, those directors' consent has to be obtained. Similarly, submission of a statutory declaration that everything connected to the formation of a company has been complied with. That has to be paid. Then you have to pay the fees and amount of stamp duty electronically. See, there is a fee based on the authorized capital of the company, and for every form, there is a fee to be paid. Again, based on authorized capital, nominal amounts. You have to pay all that. And then, once all the forms are filed correctly, approved, then the registrar will issue certificate of incorporation, digitally signed by ROC. Okay. Then within 30 days, you are supposed to file details or declaration about address of registered office. With that, your company has come into existence. Okay. So this is the procedure for incorporation of a company. Now, friends, I got some queries in the initial stages. Thereafter, I'm not getting any queries. Is it my problem or? Yeah. Shall I continue with the lecture? Yeah, just queries you just check now. I'm not getting the queries. Okay. Done, sir. Done. Okay. Now continuing with the concept, we have another important concept called one-person company. This concept of one-person company is a newly introduced concept. In as much as it was not there in the 56 law, it is there in the 2013 law. See, 2013 law completed 1 year in 2023. Sorry, 10 years, 1 decade. So that company law divas was, I don't know if it's celebrated. I'm sure it is celebrated by the Ministry of Company Affairs or whatever. The company law divas and whatever it is that we completed 1 decade of the new law has passed with enough confusion and enough madness 1 year. That's why possibly we are not celebrating it as a joy. So we have to, maybe the next 10 years of this law may be better than the first 10 years of this law. It has created enough confusion and enough headache for all types of professionals, advocates. See, it has not got any business also for us because most of the confusions are silly. And there is no way we can earn money out of it by arguing in court of law. See, in Income Tax Act, there are so many small nuances which an intelligent chartered accountant can use, and you can create a tax planning. If necessary, you are able to fight it right up to Supreme Court. It is good. You make law for everybody. Such things are also not possible. These are all bad drafting, confusion, circular after circular, saying this, saying that. And 185, one section is there. The initial section was so badly drafted, then they themselves corrected it. Then that correction they gave circulars. Sure. So all sorts of tamasha was going on for the last 10 years. Now let us hope the next 10 years of this law would be better than what it was in the first 10 years. Of course, the views expressed herein are definitely the views of the professional who is talking to you, a chartered accountant himself, and not the views of the Institute of Chartered Accountants of India. But then, as I always keep saying in my lectures, every one of us who is a member of this institute has the right to an opinion. After all, it is our opinion only we sign. In the audit report, when we sign, it is our opinion that we give. In our opinion, okay? So nobody else can have my opinion. Huh? So that is one thing about being a practicing chartered accountant. Always remember that. Okay. So this 1% company is a nice concept introduced by the. See, mainly many foreign companies, foreign countries have this concept of 1% company, especially US, where people form OPC to carry on. See, where you want to see, for example, you want to carry on some business, startup business. Initially you want to start. So you will start it as a OPC. Then once it becomes big, then you will make it into a private entity. Becomes bigger, then convert into public. Becomes bigger, go for share capital, private equity. Okay, then becomes even bigger, listing. That's it. Thereafter, you are there, up there. Okay. So OPC is the beginning. Because one person company, only one person is a member. The Memorandum of Association of an OPC shall indicate the name of that other person who shall, in the event of the subscriber's death or his incapacity to contract, become the member of the company. We said, no, if 7 or more members, reduction below means 7 can become up to 1. 2 can become 1. But 1 cannot become 0. No? Therefore, they say, in case of 1% company, that 1% dies, then he should indicate the name of the other person who shall become the member in case of his death or incapacity. So that nominee's name should be clearly mentioned. And the prior written consent of such a person shall also be filed with the ROC at the time of incorporation. Okay. So this is something very important. Right? OPC. Very important, sir. Please keep it in mind. Qualifications of a member or nominee. Both member and nominee, whether you want to be a member or a nominee of OPC, such person should be a natural person. So, a company cannot form a OPC. So, you cannot have ABC Limited forming an one-person company wherein ABC Limited is the one person. No. Though company is a separate legal entity, for OPC, that member or nominee should be a natural person, born through father and mother, biologically created entity, cannot be artificial. Okay. Also, who is an Indian citizen, whether resident in India or otherwise. See this, whether resident in India or otherwise, why they introduced, I don't know. So long as he is an Indian citizen is enough. He need not be a resident in India. That is the point they are making. For the purpose of this rule, they have even defined resident, means a person who has stayed in India for a period of not less than 120 days during the immediately preceding financial year. Why they give this, God only knows. Because they are very clearly saying, so long as he is a natural person and an Indian citizen, it does not matter whether he is resident in India or otherwise. Right? But still they want to define resident as a person who has stayed in India for a period of not less than 120 days during the immediately preceding financial year. God save them. Why they want to do this, God only knows. Basically, simple. You are a citizen of US. You cannot be an OPC member or nominee. Many times, I got inquiries like this from people, and I want to form. They'll just call on WhatsApp. I'm so I'm calling from Los Angeles. Yes, tell me what you want. My name is Narsimhan. Okay, your name is Narsimhan. What do you want? I want to form a one-person company. Okay, form. No. I want to know whether I can do. What is the procedure? He said, first of all, tell me, are you a citizen of India or are you a citizen of US? I am citizen of US, but I know I have what is that? OCI, overseas citizen of India. I said, Bhai Saab, you have passport na? हाँ, passport है. Okay. आपका पासपोर्ट यूएसए का और इंडिया का या इंडिया यूएस पासपोर्ट सॉरी सर यू आर नॉट अ सिटीजन ऑफ इंडिया ओके आई कैनॉट डू एनीथिंग अबाउट इट you decided to go there, you decided to accept the citizenship of a foreign country for reasons best known to you, no blame on you for that. No, you cannot say that I am also an Indian citizen, you are a citizen of US. Okay, So only Indian citizen means passport, Indian ka passport, then you are Indian. Dual passport, nobody can have. Believe me when I say it. You may have a OCA card, overseas citizen of India. Okay, feel proud, Parvasi and all. But whatever it is, you are a citizen of US. Now, Abhi, you are a citizen of US. That's all we know. So you cannot form a OPC in India. I hope you got the point about Indian citizen. Resident of India, don't break your head. Whether resident in India or otherwise, even if he has not stayed in India for not more than 120 days, if he has stayed in India for less than 120 days, even then, if he is a citizen of India, he or she can form a one-person company. Okay. Now, the nominee may withdraw the consent by giving notice to that sole member and to the OPC. In such a case, the sole member should nominate another person as nominee within 15 days. The sole member should send an intimation of such nomination in writing to the company, together with the written consent of the nominee. Again, so in case the nominee expresses his, in case the nominee expresses his, sir, now I've received the test inquiry 123, sir. I've received it. So, in case the nominee is withdrawing his consent, then sole member should appoint within 15 days another nominee. With that consent of that nominee, it has to, Form INC3 has to be filed. In case you want to change, again, you have to do everything. With the consent of the new nominee, you have to send Form INC3. Okay. And this need not be deemed as a change in the alteration of memorandum. Though the name of the original nominee will come in the memorandum. First nominee will come in the memorandum. Thereafter, no need. Just for your general information, let me premise that any document, form, filed with the Registrar of Companies, uploaded on the Ministry of Corporate Affairs portal, will become a public document. It will be available for inspection by any person. More about it later when we come to the doctrines. But the point is, once you file any document, it becomes a public document. And every person is deemed to have knowledge about it. See, once it becomes a public document, you cannot say, I didn't see it. Because we have filed it. It is up to you to go and verify with the registrar. Okay. Now, the nominee becomes the member on death or incapacity. In case the death of the sole member, automatically the nominee will become the new member. Then such new member shall nominate again one more nominee. Okay, within 15 days, again everything. And this will go on until time with us shall be no more. This is a cyclical process. So within 30 days of receipt of intimation, withdrawal of consent, change of nominee, cessation, whatever, it has to file intimation together with the name of the new nominee in form number INC4. Okay. All the above nominations shall be in writing, whether specific form has been prescribed or not. So it should be a letter. A natural person shall not be a member of more than one OPC at any point in time. And said person shall not be a nominee of more than one OPC. So at any time, I can be member in one OPC, nominee in one OPC. That's all. Okay. Suppose you become member, suppose you're a member in one OPC, you become member in another such company because he is a nominee. See, Mr. A is a one-person company member. He is also nominee in B Limited. Now B dies. Then B Limited OPC, A becomes the member. By virtue of death of B, then he will become member in 2. Within 180 days, he has to decide whether he will be a member here or there. And accordingly, he has to appoint nominee or make somebody else a member and go. So no minor shall become member or nominee of the OPC or can hold share with beneficial interest. Right? See, conversion of private company, public company and all always possible. Whenever you want, you can do. Okay? If you want to convert an OPC into private company into OPC, all you have to do is alter your memorandum and articles, change it, make it suitable for private company or public company. Then ensure that the minimum number of members and directors is there. And the minimum paid up capital requirements, if any, should be maintained. All that you put, then you apply in form number INC 6 to the registrar. You give the memorandum and articles, copy of resolution, list of proposed members. In case there are any creditors, list of creditors, their NOC will be called for, because they may, see, it doesn't matter for them still. Their NOC can be called for. Sometimes it may be waived. Then the latest audited balance sheet and P&L account. Put everything together, upload. Once the ROC is satisfied, then they will cancel the old OPC certificate of incorporation and issue a fresh certificate of incorporation in the new organization, private or public, as the case may be. Similarly, a private or public, see, one thing you be careful now, Section 8 company cannot become OPC. Similarly, OPC cannot become Section 8 company. Section 8 company, OPC, you cannot convert into Section 8 company. Similarly, Section 8 company cannot get converted into OPC. Okay. So, if you want to convert any other company other than Section 8 company into OPC, other than Section 8, then you have to pass a special resolution in the meeting. What is special resolution? We will see when we come to management and administration. Definitely, I will tell you. Don't worry. Before passing such resolution, the company shall obtain no objection in writing from members and creditors. Here, 100% you have to get NOC, because you are moving from private and public to one person. Therefore, you have to, because some of these people are going to go now. Therefore, no objection should be obtained from members and creditors, right? Because all the other members are going to go. Only one person is going to be there. So they should all give their agreement. Obviously, they will all sell the shares to this one guy. Otherwise, how? They cannot be shareholders. No? So they'll sell. Finally, number will come to 1, then convert. I have not heard of, as of now, I have not heard even one situation where a private company has become a, or a public company has become a OPC. I'm sorry, public cannot become OPC. Private company may become OPC other than Section 8. I've never heard even one private company wanting to become OPC. Though it is available. Such provision is available under the law. Then, of course, you have to file a copy of the special resolution with the ROC, and then all the form INC 6 and all that, same thing, you will be able to get fresh issue of that. Okay. Now, the format of the Memorandum of Association for a company limited by shares. Again, queries have started. Shubhajit, the bootstrap company, so basically bootstrap, it's non-technical terms, sir. Please do not confuse with non-technical terms, Mr. De. Bootstrap and certain terms are used by, modern language, not defined. So bootstrap, basically bootstrap is basically a company which is formed by entrepreneurs who don't have money, with their own funds in the garage, just like, our Steve Jobs started this so-called Apple Corporation in the garage, bootstrap, where they have nothing. So they managed to get some money from relatives, friends initially. Then they set up, and they usually inventors. They'll be basically inventors. They'll come out with type of ideas that they will form a company. Bootstrap. So definitely there is bootstrap company and OPC alag. OPC is a very, very legal form of organization where one person alone will become a member. Now, bootstrap company may be an OPC, started as an OPC. One person can start, but they have alag, because a bootstrap company may be even a private company with 2 people. So please don't, already confusing topic, don't further confuse yourself by referring to non-technical terms like bootstrap and all that. I mean, it's a general English word, yes. Bootstrap means this, but it is not a legal term, not used in the Companies Act anywhere. Okay. Maybe bootstrap and startup, you can say, are similar terms. Bootstrap and startup company, ideally. We'll see memorandum. Memorandum is the charter of the company. Memorandum is the document by which the company comes into existence. Just like, we have the Constitution of India. Once the Constitution of India was signed, automatically India became a sovereign democratic republic. Similarly, when the memorandum is signed and uploaded, the company comes into existence. So it is a charter document. It contains certain important clauses, we will see, which about the company and all that. So basically, memorandum is the document by which the company comes into existence. One person become member and nominee of two different, correct. You can be member of one OPC and nominee of another OPC. You cannot be member and nominee of the same company. No. You become member of one company, some other person will become nominee. You become nominee of some company where some other person is member. So one person become member and nominee of two different OPC. If that is what you're asking, correct. Yes. Okay. So, as I was explaining to Mr. Shreyaskar Kumar, memorandum is the document. It contains various clauses. For example, what is the name of the company? That will be mentioned in the memorandum. Name clause. Name of the company shall be. In the case of one-person company, which is basically a private company, the name should have OPC as suffix. Okay. See, OPC is basically a private company. So OPC, private limited. Okay. Also, it will have a domicile clause or situation clause. Friends, please be careful. Registered office is address, postal address, whereas domicile is the state in which the registered office of the company is to be situated. There are 100% in India, though we may say we are citizen of India, still we have states. So you and I have different domiciles. My domicile is the state of Tamil Nadu. Nothing can be taken away from that. I cannot deny it. I am a citizen of India. But which state? Tamil Nadu. So domicile is the state in which the registered office of the company is to be situated. So I am bound by two different sets of laws. One, the central enactments. Along with all of you as an Indian, I am also bound. Then the very specific laws of my state of Tamil Nadu, to which I am subject as a domiciled in Tamil Nadu. The minute you decide to come to Tamil Nadu, you will also be bound by those laws. If I decide to come to Maharashtra, I will be bound by Maharashtra law. So it depends on where I am staying. That law will govern me. Okay. I cannot go to Maharashtra and say, I will not obey your law because I am coming from Tamil Nadu. No. They say, you are here. Now then you obey my law. These are the laws you will have to comply with. If you want these benefits, like that. Okay. That is why, Indian CE, central power is there, state government is there, education is state policy, it's also central policy. It becomes so confusing. Okay. There is no single thing. Within this framework, everything happens. Okay. Whatever it is. So company has to have a domicile, which means a company cannot be across India. It should be in one state. If you are forming it, that also gives jurisdiction, sir. If you are going to be formed in, say, Maharashtra, then Mumbai, then you will come under the control of the Registrar of Mumbai, the ROC Mumbai. Okay, so that is why we have to have a registered office. If you are in Odisha, then you will come under the Odisha Registrar, Bhubaneswar. And that will in turn come under the regional director. Registered regional director would be in Kolkata. So all that becomes very, very important. So that is why registered office becomes very important, including the police jurisdiction. Suppose tomorrow any penalty is there, offense is there, court is summoning, you are not coming, the police station will be informed to produce you before the court. For that, which police station will have jurisdiction? That will depend on which state you are domiciled. Plus, the registered office also will be there. Within 30 days, once you give the PIN code, for each PIN code, the appropriate police Thana will be there. And that police station only, that sub-inspector only will come and call you, invite you. Please come, sir. The notice has come from the registrar office. You are not responded. Prosecution notice, please come. Okay. So, For all these jurisdictional purposes, we need to have domicile, right? So, objects clause, the objects for which the company is proposed to be incorporated, very, very important. See, when I was born, or maybe when you were born, I don't know about that. When I was born, my parents did not, write in a paper, we hereby have got a son called Srikan. Name of the son shall be Srikan, domiciled in the state of Tamil Nadu. Then object clause. His objects of his life will be to become a member of the Institute of Chartered Accountants of India. Whatever. They didn't write. Because I'm a natural person, they gave me the freedom to choose my objects. The company being an artificial person, who decides the objects? The people who incorporate the company, they decide for what purpose you are forming the company. Okay. So you have to clearly state it. So this is called the main objects. Very, very important. You should state the main objects very clearly and say these are the objects for which the company is proposed to be incorporated. So if you are going to form a company for running a cement factory, then you should say the main object of the company is to manufacture, trade, export, import, blah, blah, otherwise deal in cement, clinkers, all types of cement products, etc., etc., etc. Okay. So unless you state that very clearly in the main objects, later on you'll be in trouble. So they insist that the company should have at least one, maximum 3 main objects, at best 5. Usually they don't let you go beyond 3. And these 3 objects also should be connected with each other. See, for example, sugar plant, if you are having, then sugar plant will definitely have molasses. So alcohol, we have to give you alcohol or sugar and byproducts. You will definitely go for along with sugar, you'll sell molasses. There's no other way out of it. One of the major byproducts is molasses, then pressed mud. So many things, and a generation of electricity. So we can have, but it should be interconnected. Otherwise, it will be difficult. Some connection should be there between your main objects. Liability clause. As we already saw, it is here that the liability of the members will be clearly stated, whether it is limited by shares or limited by guarantee, etc. Also, the capital clause. The authorized capital will be stated here. The maximum amount up to which shares can be issued. Similarly, the association or subscription clause, where clearly they will say, we, the persons whose names are signed below, hereby agree to come together to form a company. That is why this is called association or subscription clause. So if it is paid limited by shares, they will agree to take up shares as part of their commitment. If it is limited by, if it is limited by guarantee, then they will give the amount to be paid in the event of winding. In the case of one-person company, the name of that one person will be clearly stated. Subscription clause will have, 6th clause will have one more. See, the 6th clause of normal company won't be there. Instead, you will have the name of the one person who's there. Also, the name of the nominee should be very clearly stated. 8th clause. Sri Srimati, who is son of daughter of so-and-so, shall be the nominee in the event of death of the son. That also should be stated in the memorandum. But later on, every time you change the nominee, there is no need to amend the memorandum. That will not amount to change in the memorandum. Okay? Even if you file INC 3, that is enough. So this is regarding incorporation and memorandum, etc. Yeah, test query from OFC, I've got it. But not many queries are coming. I don't know, something is wrong or whatever. There are more queries can be shared, I will answer them. Anyway, let me quickly go through these. Is there any prescribed limit for a company of being a public company? I'm not able to understand the peculiar wording of this question, but I'm assuming that whether a company can become a public limited company, you can form it as a public company itself. You can form a company as a public company at the time of birth itself. It can be a public company. Is there any prescribed limit for a company of being a public company? In the sense, you can form a public company, you can form a private company, convert it into a public company, but you can't convert OPC, you can convert it to public company. Whatever you want, there is no limit at all. Whatever you want, do it, whatever you want, enjoy. There's no limit. Okay. You form a private company, convert it to public company. Form a public company, convert it to private company. Have fun. There's no limit. See, it is all your need. See, suppose you're only a small group of people. You want to enjoy limited liability and run a business with a separate legal entity. Private limited is good enough. Suppose you want it a little bit bigger, mainly when you want to take more outside money, possibly in another 3 years you want to go public, then maybe you might want to convert yourself into a public company now itself. Okay, so it's your choice. It's your commercial choice rather than any legal or statutory time limit has not been prescribed. See, even assuming that you want to go public, under the SEBI guidelines, you will find 5 years profit track record. Even that track record, you can have it as a private company, not a problem. But at the time of going public, you should be a public company because private company is prohibited now from making of public offer. Now, we saw the clauses of the memorandum. Okay, it's a name clause, domicile or situation clause, object clause, liability clause, capital clause. 6th clause is the subscription clause or the association clause. 7th and 8th are only for OPC. Okay, we saw all that. Now, in case you want to change these classes, can you do it? Yes, you can. The name stated in the memorandum, okay, can be changed. I'll be talking about that. In the meantime, please remember, the name stated in the memorandum shall not be identical with or resemble too nearly the name of an existing company. Okay. So you can't have a similar name either under this act or any previous company, or be such that its use by the company will constitute an offense or it's undesirable. Sometimes some names are not suitable. There's elaborate rules for undesirable and all that. Especially, you can't have any word or expression which may give the impression that they are associated with central government or state government. So, if so, you have to prove whether you have such thing. Okay. Similarly, you cannot violate the emblems and names, prevention of improper use. You can't do that. Okay. So if you go through Rule 8 and all, you will find a lot of examples are given of resembling one another. See, resemblance may not be only in terms of actual name. For example, it can be pronunciation also. Homophone can be there, where see, Sony, S-O-N-Y. S-O-N-I, Sony is a surname in the north. Sony. Punjab, I think Western region, Sony, you will find S-O-N-I, Sony. No, though the word Sony is there, the pronunciation is Sony. There is a huge Japanese company called S-O-N-Y, Sony. So there may be an objection by Sony Corporation in case you want to. In fact, there was in those days, you used to have cassette tapes. So there instead of Sony, it was called Kony. C-O-N-E-Y, Kony. And they were very popular. In fact, Kony TD, that cassette tapes were very popular, Kony. Okay. And so these are all there. You have to be careful. That's all. You can't think. Should be sure that there's not resembling like that. Something like that. Okay. So if you want to get your name, better you go and get it reserved. First, you make an application for the name. The registrar will check whether such a name is there or not. If it is unique name, then it will be given. In case they reject it, they will ask you to change the name slightly. Resubmission will be allowed within 15 days for rectification of defect. So then, once you are satisfied, it will be given. it will be kept reserved for 20 days. Thereafter, you have to keep renewing it, which is why nowadays, we always insist on clients. Sir, please be clear. Once you are clear about the name, 20 days, if you're going to incorporate, otherwise, name will lapse. Again, we have to make an application. Be careful. So once after the reservation of the name, if it is found that it was given by furnishing wrong or incorrect information, then if the company has not been incorporated, the reserved name shall be cancelled, and the person who made the application will be punished with fine. If the company has been incorporated already, then the registrar will direct the company to change its name within a period of 3 months after passing an ordinary resolution. Or he can take action for striking off the name of the company also. Or he can even make a petition for winding up. Winding up and liquidation are one and the same. Okay. Now, how many regional directors are there in India? I'm not aware. I think 5 are there. Central region also is there. I think there are 5. I can only check up and tell you. Let me see. Same question. One second. In 2 minutes, I will have the answer. Seven regional directors are there. There are 7 regional directors. Okay. So, if you want to know how many ROCs are there, I can tell you. Okay. 25 ROCs are there. Tamil Nadu and Maharashtra have 2 ROCs. There are 7 regional directors. Okay. See how easily, once you have generative artificial intelligence supporting you, how easy it is to answer such questions. See, madam, do you notice one thing? There are some questions which can be answered by a faculty. There are some questions which can be answered by Google also. What do you say? Pratima Upadhyaya? Don't worry. After all, where will I get my information from, madam? You think I'm sitting here, I don't know everything? No way. I will also go to Google only. Aap bhi go Google jaiye na, please. See, when such information and all, don't even waste your time remembering. See, if you are all younger generation, tell me, artificial intelligence meant for doing our job. Why are we wasting our time remembering? See, this stupid Google is supposed to give me that information. I gave it to you now. 7 regional directors. Who are the 7? I will tell you that also. Which region you go? See, such research. That is why in US and all, this mug up and vomit gone. The education is today not about mugging up and there are 7 regional directors in India. No. What is the role of a regional director? And why is he there? That you have to know. Okay. So once you want to practice it, if you decide to practice in Chhattisgarh, who is your regional director, you can easily find out. You just have to go there. That's all. Today, information is at your fingertips. There is no need for any teacher to teach you. What you need to understand from a teacher is the nuances of the subject. Why? What is the principle behind it? Like that. And what are my powers? What are my rights as a citizen? Like that. I'm not trying to put you down, but I'm just, Pratimaji, I'm only trying to say some information. See how easily it is available in the Google. It can be Google or the World Wide Web. It's there. Nothing wrong. So you ask me, it's my duty, and I will tell you. I can tell you there are 7 regional directors in India. It's there in the ministry itself. See, Eastern region, Southern region, Northern region, Western region. Then they got to Northwestern region, Southeast region. I don't know what that Southeast region will. There is Telangana and all. They've got Southeast region, this side. And so I think Andhra will come in Southern region and Telangana comes in Southeast region. And then there's a Northwestern region. And of course, beyond Kolkata, you have the Northeastern region with its head office in Shillong. I'm sure earlier they must have all struggled to come to Eastern region. Now they have got their own region, Northeastern region. Okay. So nice, na? Good. 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 Now, in fact, thanks for educating me. I was all along on the impression there were five. And I was on the impression there was a central region, which was Madhya Pradesh, Chhattisgarh, and all that. But now it looks like Madhya Pradesh and Chhattisgarh would come under the northern region, and again east depends. Whatever. But don't take me otherwise also, Prathimaji. So after all, today I tell you, in those days when we were studying, this facility was not there. So we had to go to library, get books, read. Today, Karlo Dunia Mukti mein, you got your world at your fingertips. Just you have to Mukti mein, in your palm. Just have to go there and get the information. And all of you are carrying for mobile phones. You are using it for Instagram, Facebook. I don't know. That is, I think, Buddha ka hai. No, I think Abhito it is Instagram and Reels and all that. In addition to that, why don't you use this Google for doing some research also in the subjects? So there is nothing there which is not there in those days in the ancient wisdom, Mahabharata. It is said there is in Mahabharata everything is there. Everything is there in Mahabharata. If something is not there in Mahabharata, it cannot be found anywhere else. There is a claim made about the Mahabharata. It's so great. So huge a compilation, any Puranam, anywhere if you find it's there, all that is there in Mahabharata. But if it is not in Mahabharata, then it won't be anywhere else. Like that they used to say. Okay. So, like that, Google has become like that. It is everything is there in that. It's the Viswarupam. You can see the entire world. Everything is there in that one thing. It's up to you how you tap into that infinity of knowledge and use it for your purposes. So articles, just like we said, memorandum is the charter of the company. Articles of association are the rules and regulations. The relationship between the members and the board of directors, how the directors are to be elected, how they will be appointed, everything will be there. How the board will meet, accounts will be audited, when it should be given, AGM, EGM, everything will be covered in the articles. These are the bylaws. Okay. Together, the memorandum and articles become one powerful central document for the company. Whatever is stated in the memorandum and articles limits the scope of a company's activity. A company cannot do anything which is beyond the scope of its memorandum and articles. If it does anything beyond the scope of memorandum and articles, that is called ultra vires, beyond the powers. Okay. Now the model articles are given. Company may adopt or it can have its own also, but it cannot have any provision which is contrary to the act. The act is superior, nor can it have anything contrary to the memorandum. Okay. But in case the articles do not provide for something or exclude or modify anything, then the appropriate regulation will apply. Okay. So if you are a company limited by shares, table F will apply. In case you are providing something different within the framework of the law, then your article will prevail. But if you are silent, your article is silent, then table F will apply. Okay. So as we said, memorandum is the constitution and charter of the company. It defines the company's relationship with outsiders. It defines the scope beyond which the activities of the company cannot go. So beyond the memorandum objects class, you cannot go. Okay. Memorandum is subject to Companies Act. It cannot contain anything contrary to the Act, but it is superior to AO articles. Whereas articles is basically internal regulation. It defines the relationship between the company and its members when the members intersect. So whereas the memorandum defines the relationship between the company and outsiders. The articles operates within the broader framework of MOA. Something may be beyond the scope of articles, but if it is within the scope of memorandum, it can be ratified by the members. For example, suppose your object is to manufacture cement. Directors are entitled to borrow up to 1 crore For the purpose of the business of cement manufacturing, directors borrow 2 crores without the approval of the members. This is ultra vires the articles, but not ultra vires the memorandum. Therefore, the members can ratify it. They can say, even though the articles say up to 1 crore only you can borrow, beyond that you need to come to us. You have borrowed, but it is for the company's objects. No problem, we ratify. Can be done. But if it is beyond the scope of the memorandum, then it is ultra vires and void. Not even all the members can ratify it. The articles are subject to the Memorandum of Association as well as the Act. Okay. Now, this provision of entrenchment is there. It's an interesting provision. And again, a very peculiar brainchild of the Ministry of Corporate Affairs in 2013 law. See, the idea is simple. Entrenchment is the process by which an amendment or alteration of a clause in the Articles of Association is made more difficult. Normally, for amending the Articles of Association, you have to pass a special resolution. To amend the Articles of Association, you need to pass a special resolution. In case the members want, they make it tougher. They can make it tougher by making it, say, unanimous resolution or whatever, something like that. Okay. So entrenchment means making something more protective. Maybe they can take 1 or 2 clauses of the articles and say, to amend these articles, you need unanimous resolution. So the articles may contain provisions for entrenchment to the effect that specific provisions of the articles may be altered only if conditions or procedures that are more restrictive are met with or complied. See, if you don't include it in the original articles, then you can amend the articles for including entrenchment provisions, provided it is agreed to by all the members in the case of a private company, or it is done by a special resolution in the case of a public. In the case of public company, a special resolution is to be passed. So can you see the arrow? In the case of, in the case of private members of private company, all the members should agree. In the case of public company, the entrenchment provision should be introduced by passing a special resolution. See, the purpose of this is to enable the members to make certain provisions tougher to amend. For example, having said that, again, I have not heard of any entrenchment provision. Never. I've inquired with many company secretaries because company secretaries are doing so much incorporation and all or amendments. Do you have any company where entrenchment provision was introduced in the article? No, sir, nothing. We are not at. Though the provision is there in the. So, and from exam point of view, yes, they would want to ask you because it's a new concept. Huh? So, entrenchment, if it is done at formation, no problem. If it comes in after coming into existence, then in the case of private company, all members. In the case of public company, by special resolution. Okay. The Act will always override the memorandum and articles. If there is a conflict, if the memorandum is providing one thing and the Act is providing, Act will always prevail. If the articles is providing something and the memorandum, then Act will always prevail. Okay. Any provision contained in the memorandum, articles, agreement, or resolution shall, to the extent to which it is repugnant to the provisions of the Act, become void. What is the meaning of the word repugnant? Meaning unacceptable, not acceptable, repugnant. Okay. When something, it's objectionable, then it has to be, the Act will always prevail. Now, see, save as otherwise expressly provided in this Act will override the memorandum. So there are certain provisions in the Act which says that articles can provide differently. So many cases, the Act itself says articles can provide differently. One example is Section 47 deals with voting powers. Okay. So 47 is applicable to a private company subject to its articles of association. So private company wants, they can say 47 is not applicable to them. So here very clearly, save as otherwise, here very clearly provided in the act, where they say in case a private company wants, they can avoid 47. So a private company may avoid the provisions of section 47. Whereas if they don't want to, they can adopt 47. The option is given. So the law may specifically provide that articles can provide differently. So the memorandum and articles of association form a contract between the members and the company and the members' interest. Please understand. There is no other person. Third party cannot become a party to the memorandum or articles, even though that third party's name is mentioned in the articles or memorandum. This is sometimes where, there are some examples in the material where students get confused. See, you might say A should be appointed as company secretary in the articles, but A cannot have no right to sue on that because A is not a party to that contract. Please understand. The contract is between the members who signed the memorandum and the company. Who can take action on that contract? Only the company or these members can take a contract, right? So here is an example. The articles of a company contained a clause that on the bankruptcy of a member, his share should be sold to the other shareholders at a price fixed by the directors. Now, B, a shareholder was adjudicated bankrupt. Bankrupt means insolvent, not able to pay his debts. Bankrupt. His trustee in bankruptcy claimed that he was not bound by these provisions and should be at liberty to sell the shares at the true value. C, no, because when B bought these shares, he entered into a contract which is binding upon him. And what is binding upon B is binding upon the estate of B. After all, B, the trustee is only bound to obey the rules of the estate. And the estate itself is bound. No. On the death of B, the assets of B become part of his estate. Now, the trustee for the estate of B can only do what is stated. He cannot say, I'm not a party. The estate of B is the party. So, there is a clear contract between the members and the company and the members intersect. By the same token, there is no contract between the third party and the members of the company. The articles is of a company provided that Eli should be a solicitor for life to the company and should not be removed from office except for misconduct. Okay. Who entered into the contract? Articles, which means company and those members who signed the articles. And every other person who becomes a member later on automatically becomes signatory to the articles. Every other person who becomes a member automatically becomes binded. He is bound as if he is the original signatory to the memorandum and articles. Okay. When you buy a share of Reliance Industries, it is as if you originally signed the memorandum and articles of association as amended up to now. Everything is binding upon you. As of now, whatever is stated in the memorandum and articles binding upon you. But it is only between the company and its members and members intersect. Now, in that articles, they provided that Eli should be a solicitor. Later on, he also became a member of the company. That is okay. But after employing him as solicitor, the company discontinued his services. He, being a member, sued the company for breach of contract. They said, no, hello, Eli, as a member, you have not been violated. Your right has not been violated. There is no infringement of your right as a member. Eli, as a solicitor, sorry, you have no right under this contract because as a solicitor, you are not a party to the articles. You are only named in the articles. The members now decide not to appoint you. There is their call. You cannot insist. You said, okay. It's a little difficult to see. These are the legal issues where you have to be a little more broad-minded. You have to understand clearly what the provision is and try to work. Now, ultra vires, as I told you, if any contract is beyond the powers of the memorandum, scope of memorandum, it is ultra vires and therefore void. The point is, a company's money is to be used only for the purpose of the company. It should not be used for any purpose which is not stated in the memorandum. So if the company, if the directors borrow money for something which is not stated in the memorandum and somebody lends it, then the company is not bound to pay. So very, very damaging thing. Because I'm a third party. You came to me. You said you're running this Ashbury rail carriage versus Rish. They wanted to, they purchased they on credit, they purchased goods. But for manufacturing, for laying a railway line in Belgium, whereas their main object was to manufacture railway coaches. So they said, no, the creditor cannot prove. How do I know what you are capable of doing? That is where the doctrine of constructive notice will come. That is, you want to deal with the company, then you are expected to know what the company can and cannot do. How? Based on the documents already filed. I told you now, every document filed with the registrar becomes a public document. So every person who wants to have dealing with the company is supposed to have read those documents. That is called doctrine of constructive notice. So you're supposed to know. Therefore, you should clearly say, I will not lend unless you amend your memorandum. Okay. So if you are in a banking situation, you have to be very careful. Before you lend it to the company, please find out, does the company have the right to do this? Do they have the right to borrow money for this purpose? If not, tell them, boss, you amend your memorandum, come to me. Otherwise, no. But doctrine of constructive notice is fine. You are saying that if the directors have to borrow beyond 1 crore, they have to get a resolution from the members. Now, this director comes to me and says, we have passed such a resolution, and he produces a resolution duly signed by the chairman. I go to the registrar's office, I sign, I go through the MCA document, I find, yes, there's a record that such a resolution was passed. That's it. I cannot go and find out whether that actually the resolution was passed. How can I find out? That will go into the procedural aspect. I can only check what is to be done and ask them, have you done it? Give me proof. That's all. Beyond that, if I go, it will amount to going indoor, behind the door of the boardroom, which I cannot do. That is why this is called doctrine of indoor management. It is called doctrine of indoor management, also known as Turkan's rule, because the doctrine was first laid down in the case of Royal British Bank versus Turkan. There, the company had powers to borrow money, provided a proper resolution was passed. The company borrowed money and issued bonds. The resolution was not, in fact, passed. See, the bank asked whether such a resolution was passed. They said, yes, it has been passed. They gave a copy. But whether it was actually passed, how do we know? Okay, the company was bound. That the fact that the resolution was not, in fact, passed. No. So the bank was bound to inspect the articles, which it did. Beyond that, they were neither bound nor entitled to look. Otherwise, it would take them indoor. That is, this word indoor was first used in the case Mahoney versus East Holliford Mining Company Limited, right? Now, there are some notable exceptions to the doctrine of indoor management, which are persons purporting to act as directors or having actual knowledge of the irregularity. See, where I myself, I'm acting as a director, how I can say I'm not aware? Because I'm indoor, I'm part of the transaction. Or where the act is ultra-vires the company itself, then it cannot be done. That's it. Doctrine of ultra-vires is the exception to the doctrine of indoor management. It is ultra-vires the company itself, nothing can be done. Forgery again, see, if you are a banker and a check is coming to you with the forged sign, see, however, you cannot plead doctrine of indoor management because you are presented with the signature, which you are expected to verify. If you have the suspicion that it is a forgery, you have to return it. A forgery is a nullity in law, straight away. Similarly, when the transaction is of so suspicious nature that the person should be put on inquiry. See, in one case, A.L. Underwood versus Bank of Liverpool, they found that this guy, the MD was putting his, the company car check he was endorsing in his name and putting it in his personal account. Huge amount. So that automatically the bank is put on inquiry. You should have asked him, hey, what are you doing here? Why are you depositing everything into your account? So the bank was held to be liable. Though they claimed indoor management. They said, what do I know the MD is doing? Said, hey, come on, company account is there, individual is there, individual's account is depositing by endorsing. How can you allow him? Or at least you should ask him, no? You have put an inquiry. Okay. So these are the various topics. Friends, let me see if you have any more queries. Otherwise, I will try to wind up. What if they make fake documents or produce some documents which shows some? Sir, that is why whenever you have a doubt now, even if you think that you can always go to the registrar, MCA site, and go through it. Suppose you're getting some documents, keep it. You go to the MCA website and download the documents. Whatever is there is the original. Whatever is there is the original document. That's it. If those same documents are produced to you, then that is not a fake. So that is how it is. You have to verify for yourself. With you have to compare it to the Ministry of Corporate Affairs document. If that is correctly done, you are safe. Verify that. So which is why before you go for any type of commercial relationship, please do a search in the MCA, which is a substantial transaction, especially you're lending money or supplying huge amount of goods on credit or taking up a contract with the company. Better to do a search in the MCA site as to what is their memorandum and all that. Hire a company secretary and you can do it. Yeah. So great. Friends, there are some more topics I would have to cover on this, in this topic itself, plus prospectus. I don't know how I'm going to do all that. I don't know what the idea is. Anyway, whatever little knowledge I could share with you today, I have shared. Whatever I would like to, let us see how it pans out in the coming days as to how this topic is going to be covered and how we are going to do something. Okay. Thank you very much. In case what I suggest, the entire lecture in its entirety by me or somebody else would be there. Kindly watch it in full and before the next class so that you can have any queries, you can raise it at that time. This entire set of PowerPoint presentation has been fully covered. Okay. Yes, sir.
Sir, Anup has a query.
Shall I stop sharing?
Anup, you can ask your query.
Yes, sir. Hello. Hello. Could you hear me,
sir? Yeah. Yes, sir.
Sir, doubt was of government company का example दिया ना sir. You gave the example of government company. In that NTEC Limited ना sir, like Bharat Biogas for example. In that company, it means 51% it will be held by government only ना sir. And
in NTEC
both together, if they hold, yes sir.
No.
If both together,
yeah, go on. Finish your question.
If both together are holding in Bharat Biogas, the government company and the central government or state government together, why Bharat Biogas is not a government company, sir?
See, your argument is that NTECL will have Bharat government. No. What is the definition of a government company?
Central government, state government, or central or state will have 51% or more.
Now I am able to understand your argument, Anupji. You are saying Bharat in NTCL Limited, government will have 51%.
Government.
Which government? We don't know. No, that is not given in the question. Assuming that central government is having 51, you are saying I am understanding your question well. I got your point. Yeah, I got your point. Central government having 51% stake in NTECL Limited.
Yes,
okay, sir. You are saying. In which case, actually it is not like that. For your information, it is actually NTPC is having less. Okay, but if by definition, by that way that becomes a government. But by definition, it will have 51. Your logic is government will have 51% in NTECL. So NTECL is my subsidiary. Government is holding for 35%. NTECL is holding balance. So together they are holding. Is that what you're saying?
Yes, sir. Can it be so, sir?
It will become a subsidiary of a government company. That way,
Yes, sir.
it will become your argument is that 51% will be held by government. See the subsidy. Do you remember the numbers? How much was NTECL holding?
It was, I think 15, sir.
NTECL, huh?
Yes,
No.
sir. In Bharat Biogas,
30%.
30.
30%.
30%
Central government
by
15, state government 15,
30%.
and
Central government, yeah. Central government 30. No. Central government. I forgot. I have removed that PowerPoint. I'll just check it up and
central
I'll
government
get.
15, sir.
Huh? I have it here. I'll just, without showing it to you, I'll just check 1 second. Good, but I'm very happy. Your argument is very well taken. Let me quickly see this. It's a good question. In principle, your point is well taken, sir. In principle, I will agree with your point, sir.
Yes.
That if it is a government company, NTECL is a government company, then that government company will be having 51% of it will be central government.
Yes.
Correct. But how it will become a government
Yes.
company by definition? See, the definition is government. See, it should be a subsidiary of a government company. See, it should be a subsidiary of a government company. So your argument should be that NTECL Limited will have a government company as its holding company.
Yes, sir.
This
Then
Bharat Biogas is not a subsidiary of a government company.
Okay, sir.
You are saying, how you are arguing is NTECL Limited itself is a subsidiary along with another government company, something like that. Together they are holding more than, but for that we don't have data here.
Okay, sir.
For that we don't have data. Your argument is not wrong. You can always use that argument. But in this case, the data is not there. But if you are able to show that NTECL Limited itself having another government company, which is its holding company. In this case, it is not like that. NTECL Limited is not that way a subsidiary of a government company.
Okay. Yes.
Okay. Therefore, your argument in this case won't work. In general, as a principle, with what you say. Yes, sir.
Yes.
Yes, sir. Mr. Jeet. You had some doubt, Mr. Jeet?
Hello, yes, sir.
Yes, Ms. Rashmi.
Yes, sir. I have one doubt. Can one person becomes a members of one person company and becomes a nominee of the another one person company?
They can. I already answered that question, no?
But जब date of incapacity or insolvency of person nominee becomes a member, then it is becomes nominee of another person, another one person company.
Madam, can you give an example? A limit. See, there is one person company called A OPC Private Limited. In that, B can be nominee. Okay. In B OPC Private Limited, B himself will be the member. Is that what you're asking? Madam, is that the query? So, have I understood your question correctly? Sir, I think Rashmi is muted. Rashmi ji, you are muted. No. You are again muted. Sir, she is muted. Would you like to unmute her? And Anoop's hand is still raised. Is he having another query? Yes,
Hello,
sir.
sir.
Yeah.
Sir, in case of private company, maximum limit was 200, na, sir? 200 members.
Yes.
In that, employees and ex-employees who are holding us shares, they are not included in the members list, na, sir?
Okay.
Why is it so, sir? That way? Why they are not included? Employees.
Because see, basically employees are given shares to encourage to engage them and to read for the purpose of retention. So that opportunity should not be denied to the employees, na? So to give them some benefit, they said, hey, even if it's employee, we won't include it. It's a concession given for encouraging and enthusiasm for engaging the employees. So they said employees can be excluded because you are giving it to encourage them to participate in the wealth now. So that is seen as a social measure, and they said we will exclude it. So even if you exclude them, if you have less than 200 or less, you still continue to be a private company.
Right. Okay.
Yeah. Yes, sir. Any other queries? Otherwise, shall we call it a day? Yeah. Mr. Manish, Mr. Ajit, is that it? Or shall we wait?
Sir, we can conclude, sir.
Sorry? Okay. Thank you. Thank you, Mr. Ajit. Thank you. See you all. Nice. It was good. Nice to see students
Thank
at
you,
least
sir.
online in front of me for some,
Yeah.
at least. Nice to have that. Thank you. Bye.